Hello everyone and welcome to this new video, which is a complication to what we did in the previous classes. We are going to continue with the same exercise that we had before. You can see in here the exercise from last class, and we have the balance for the end of the year 2019, and that's the balance that I have in here. So I think this is going to be something similar to what you did in the activity, because you also had a balance that is different between the obligation and assets. I think it's similar to what you had in the activity. So we are going to solve this new complication. And the complication itself is that during the year 2020, in January 1st, the company decided to increase the benefits plan. So they decided to give more benefits to their employees. So now the benefits increased to $81,600. So that's the first, that's the thing that we are going to do in here. Apart from that, I think everything else is quite similar. We have annual service costs, we have a discount and investment rate. We also have a contribution from the employer. That's the money that the company pays to the fund, and the benefits paid to people who are already retired. So let's begin with the first step, which is to increase the benefits plan. Okay, that's the first thing that we need to do. So what we are going to do in here is to register this thing on the 1st of January, because it happened on the 1st of January. So it happened exactly at the same moment as we are calculating this balance. So let me write that here. I will take care of the increase on benefits plan. And what do I have to account for? Well, I need to increase the obligation, because since I am giving the employees more benefits, I have an obligation, right? So now it's an increase of 81,600. And then I have to register that also as part of the pension expense, right? So in here, I will account for 81,800. So basically what I'm doing here is that I am registering the increase on the benefits plan as an increase on the obligation and an increase on the expense. And now I have to recalculate the balance, because this new balance is the one that I will use to calculate the discount and investment rates. I need to do that too. So let me recalculate this balance, and it's going to be adding up this and this, and the same on the other side. Okay. So now, and I need to erase this. The new balance, this is where I start. It has it, and well, it's the same. This one doesn't change, right? I know that this one, because remember, this is part of the journal entries. We are going to leave it like this. We are going to recalculate only the balance on the memo record to show that the money in the fund is not enough to cover this obligation. So far so good. We are just recalculating the new balance, and we have to do it because we're going to apply the discount rate to this number, not to this number, okay? So if we go a step by step, I think the next thing to do is that I can even write like a line in here um, to make it easier to find where is the new balance. So now I think that I need to register for the annual cost, annual service cost. So service cost will be in here. And I think this one is quite easy, right? Do you remember? We only have to register the expense, 9,500, and we are going to increase the obligation, 9,500. And now we are going to calculate the interest expense and the interest revenue. So interest expense is going to be multiplying this this number. Remember the new balance, not the previous balance, times the discount rate. It's 19,360. And then the interest revenue is going to be the same, but with the assets. So remember, this is the revenue from the investment rate of all the assets that I have in the fund. And remember, because this is like the expense account, what I should do is to multiply it times the negative rate. So I get this, because this is expense, right? So expenses are positive. This is expense, all the expenses are positive. But this is revenue, this is income. So income should be negative, okay? And then we are done until here. We need to continue with the funding contributions. So funding contributions, it's going to be 20,000. So remember, funding contributions means money that the firm pays to the fund. So 20,000 positive in assets and minus 20,000 in cash. And sorry, I forgot to register what happens on the obligation and assets in here. If we have an interest expense, we are going to increase the obligation by 10%, and we are going to increase the value of our assets by 11,100. Okay, so we are keeping the balance in this table. And finally, the last thing is the benefits paid, right? So we already paid to some employees, and that is 8,000. So what happens in here is that we reduce the obligation because we already paid them, but we reduce also the assets because we pay them with the assets. So now we have to calculate the balances at the end. And here we need to be careful because in the formula, you should consider only until here, until new balance, right? So this is for this, and this is for this. And we will have we have a huge liability, right? A liability of $80,360. That's quite long, quite large. So now let's calculate the numbers for the journal entries. So in expenses, we have a total of 99,360 expenses and 20,000 in cash. And remember this, I think some of you had this mistake on the activity, on activity 1, because you were confused because you had an initial balance of 1,000. So what happens in here is that you can calculate this in 2 ways. One way is to just calculate how much money do you need to balance these two numbers. So it will be something like this. I think that it will be this. No, sorry. Minus this, minus this. If I add up the 3 numbers, I have a 0, right? So it means that in my journal entry, I will have to credit expenses for 99,360 and debit on cash and debit on pension, right? Asset and liability pension. That is one way to do it. Or the other way, and it will always be the same thing, is what's the number that I need to reach this final balance? Because this is the final balance. I already know what is my final balance. So I only need to do this minus this number. So as you can see, it's the same, right? You can do it in both ways. I think this is really helpful for you because you had some mistakes in the activity. So now to finish all of this, let me do the journal entry. So it will be expense on pension or pension expense. I don't know how I wrote it last time. Pension expense, pension expense, pension expense of this number, 99,360. Then cash, it will be 20,000. And in the asset or liability pension, it's again a liability. That's why we have it in minus. It will be minus 79, like this. So in this way, you have a balance in your journal entry, right? Like this. So this is the first complication that we are facing because we decided to increase the benefits on the plan. And now in the next step, I'm going to do another exercise with another complication.